Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. The 3 real reasons Nvidia stock is selling off. Why I will be a buyer at this price. Nvidia stock was sold off on Tuesday. It went down as much as 4%. One analyst says a sharper fall is on the way. I did some digging and found 3 reasons why this unstoppable rocket of a stock is finally being shot down. Trust me, it's a team effort. Reason number 1, the chart of Nvidia stock. RSI was at 45. We haven't seen 45 RSI since the stock was at $500. Momentum is gone. MACD is pointing south. Demand for Nvidia's GPU to power AI is set to be strong this year. The expectation is for growth to slow in 2025. Joe Luria has a hold on Nvidia stock and a $620 target price, the lowest on Wall Street. He argues that major AI chip customers such as Amazon and Microsoft are likely to shift a greater amount of their investment toward in-house hardware and calls for a significant cyclical downturn by 2026 for Nvidia. A combination of shrinking AI models, more steady growth in demand, maturing hyperscaler investments, and increased reliance by their largest customers on their own chips don't bode well for Nvidia's out years. A shift away from Nvidia's chips would depend on developers being willing to move on from the company's CUDA software for building applications. Nvidia CEO Jensen Huang has pointed to the company's software and a superior total cost of ownership, measuring both direct and indirect costs of using its chips, as reasons it will stave off competition, as well as a broader market of national governments as a reason for sustained growth. Reason number 2, Google. Google made announcements about its growing set of in-house design semiconductors. In particular, the company unveiled Google Axion, a new ARM-based CPU for the data center. Google said Axion will deliver 50% better performance and 60% better efficiency than comparable current generation x86 based cloud processors.
We're delighted to announce the Google Axion processor. It's our first custom ARM-based CPU designed for the data center and will be available in preview later this year.
Google said Axion will provide 30% better performance versus other ARM-based instances in the cloud. It said customers, including Snap, were planning to test the new hardware. Google also said that the most powerful version of its TPU processors for AI training and inference applications, known as TPU v5p, has become generally available via Google Cloud. Google is making more of its own chips, rolling out new hardware that can handle everything from YouTube advertising to big data analysis as the company tries to combat rising AI costs. Axion adds to Google's efforts stretching back more than a decade to develop new computing resources, beginning with specialized chips used for AI work. The chip efforts promise to reduce Google's reliance on outside vendors and bring it into competition with longtime partners such as Intel and Nvidia. I see this as a basis for growing the size of the pie, said Amin Vadat, the Google's VP in-house chip operations. Google's larger competitors in the cloud, Amazon and Microsoft, have also poured money into making their own chips, as the AI boom has intensified the demand. Google owed much of its early success to an investment in the chips necessary to fuel the company's web search algorithm. That often meant piecing together cheap commercially available hardware in novel ways. The boom in AI and its need for vastly more computing resources has pushed Google further in the direction of custom solutions. It has credited specialized AI chips it built, known as tensor processing units or TPUs, with helping save money on services that make heavy use of AI. Google has worked closely with semiconductor company Broadcom since 2016 to produce bespoke hardware. Broadcom's custom chip division has a surge in business after Google rapidly increased production of TPUs recently. CEO Hock Tan said the increase was partly in response to Microsoft incorporating AI features into its Bing search engine, going directly after Google's core business. They bought a ton, Tan said. The Broadcom division's operating profit of more than $1 billion in a single recent quarter came mostly from Google, Tan said. Google CFO Ruth Porat told investors in January to expect notably larger spending on technical infrastructure such as AI chips this year. Parent company Alphabet's fourth quarter capital expenditures rose by almost half to $11 billion from a year earlier. CPUs, Axion chips are suitable for a range of tasks, including powering Google's search engine and AI-related work. They can play an important supporting role in AI by helping to process larger amounts of data and handling deployment of the services to billions of users. Axion is based on circuitry from the British chip design firm ARM, making Google the third biggest tech company after Amazon and Microsoft to use that framework for a data center CPU. The shift doesn't look good for Intel and AMD. Google has resisted selling chips directly to customers to install their own data centers. The move would push the company more directly into competition with Intel and Nvidia. The biggest winner of the AI boom so far, with more than 80% of the market for AI chips. Becoming a great hardware company is very different from becoming a great cloud company or a great organizer of the world's information. Google's Vadat said, Google has chosen instead to rent custom chips to cloud customers, and the latest generation of its TPUs was now widely available. In November, Google said it successfully connected more than 50,000 TPUs to build AI systems, what it called the largest effort of its kind. Google created Gemini using TPUs and will exclusively use the chips for processing user queries. Vadat said Google prioritizes the fastest growing products and services when deciding which areas should get more computing resources. Google's in-house chip efforts began with a 2013 breakthrough in voice recognition technology. Jeff Dean, a longtime engineering leader, told the Systems Infrastructure Division that Google would need to roughly double the number of chips held in its data centers if the tech became widely used. That was really the first taste of this impending issue, he said, when Google designed the first version of the TPU a few years later. Dean lobbied executives to purchase more than the company originally budgeted for. Google has had mixed success opening access to outside customers, while Google has signed up prominent startups, including chatbot maker Character and image generation business Midjourney. Some developers have found it difficult to build software for the chips. Google said it has worked with Nvidia and other tech companies on a software project OpenXLA, aiming to make it easier to develop AI systems across different chip types. Anthropic, one of the largest users of TPUs, in September began moving some AI needs to custom chips developed by Amazon after the cloud giant agreed to invest up to $4 billion. Google later committed $2 billion in funding to Anthropic and said it had expanded its partnership with the startup. Assembly AI, a startup working on speech-to-text products, built the latest version of its technology on TPUs after encountering issues securing GPUs early last year, said CEO Dylan Fox. From an availability perspective, we've been really happy, he said. Google's investment in Axion would be worth it if the company achieved only half of its claimed performance improvements, said analyst Mike Glauteri. It still faces intense competition from the other large cloud companies for new business. Number 3, Intel. Stepping up its push to compete with Nvidia in the market for chips used for artificial intelligence training and inference applications. Intel unveiled the Gaudi 3, an AI accelerator chip. The company contends it's both faster and more efficient than Nvidia's H100 GPUs and highly competitive with Nvidia's recently unveiled Blackwell-class GPUs. The chip is designed to boost performance in 2 key areas: helping train AI systems, a process that involves bombarding them with data and running the finished software. Gaudi 3 will start shipping later this year, replacing Intel's current Gaudi 2 chip. Intel says it has commitments from 4 of the most important players in AI servers: Dell Technology, Hewlett-Packard Enterprise, Super Microcomputer, and Lenovo, to build Gaudi 3 based systems. Intel asserts that Gaudi 3 is up to 1.7 times faster than the Nvidia H100 at training large language models and up to 1.3 times faster for inferencing than Nvidia H200, which is used specifically for inferencing rather than training. Gaudi 3 is up to 1.5 times faster than Nvidia's H100 for inferencing applications. Intel also says that Gaudi 3 is up to 2.3 times more power efficient than the Nvidia H100 at running large language models. Intel will begin volume production of the air-cooled version of Gaudi 3 chips in the third quarter, with the liquid-cooled version shipping in Q4. Asked about Gaudi 3 will compare with Nvidia's new and speedier Blackwell chips, Intel said that we do expect it to be highly competitive, adding that Gaudi 3 is a strong offering that provides customers with a compelling alternative to Nvidia GPUs at reasonable total cost of ownership and high power efficiency. In my opinion, Nvidia's B200 is 30x faster than its H100. Intel's Gaudi 3 is only 1.7 faster and 1.5 better than H100. How can they compete with Nvidia? No way, man.
When you over-earn for enough of a time, what happens is competitors decide to try to compete away your earnings. In the case of Nvidia, what you're now starting to see is them over-earn in a very massive way. So the real question is, who will step up to try to compete away those profits? At some point, all of this spend has to make money, right? Otherwise, you're going to look really foolish for having spent 20 and 30 and 40 billion dollars. Most of the apps, the overwhelming majority of the apps that we're seeing in AI today are toy apps that are run as proofs of concept and demos and run in a sandbox. It is not production code. It is a really important question. Today, the demand is clear. It's the big guys with huge gobs of money. I think we still need to see the next big thing. And if you look in the past, what the past has showed you, it's the big guys don't really invent the new things that make a ton of money. It's the new guys. Intel was basically the mother of all of modern compute up until today, right? I think the CPU was the most fundamental workhorse that enabled local PCs, it enabled networking, it enabled the internet. And so when you look at the market cap, it's about 180 odd billion dollars today. So the question for Nvidia, in my mind, would be not that is it not going to go up in the next 18 to 24 months. I think the bigger question is if it's a $4 or $5 trillion market cap in the next 2 or 3 years, will it support a $100 trillion economy?
I will be glad to buy more shares if the stock price keeps on dropping to my next buy target at 740, which will be a fair value for the stock today.